Welcome back, guys, to this last episode of this week recap as of my trades. Basically, due to the fact that I only traded three setups this week. Remember, no trade can many times be the best trade, which it had been quite some while this week, and we also get into some general takeaways from this week, and we're also going to get into some market environment reflections. How stuff is changing, what to take with till week 38 from this week of 37. So let's get into the last trade. Let's not waste any time. And it was basically an ATM setup. And for those of you who don't know what I refer to as an ATM setup, it's basically a company that is, or a stock that has an ATM out, meaning at the market offering, they have an ability to sell shares at any price up to a certain dollar limit. And CBRP had this. And this was kind of not an ideal setup. And here's why. Because an ideal ATM setup looks something that it's gapping up on news that is hyped, and that short sellers can read through and also get short biased, because then it creates more selling pressure. So let's take that again. The ideal setup is, let's say CBRP gapped up, 50%. And it was on, let's say it's biotech. It's not, I think, or it is. And they have phase two results. They were kind of meh. There were, you can't read really, you can't get anything specific out of them unless you're really, into or have read about their drug. You don't really get any kind of valuable information or valid information. So what that creates is short sellers saying this is just up on hype news, and those short sellers who have read the filing know that there is an ATM, so they are much more likely to short it as well. So that creates dual layer of selling pressure. First off, the company, the most important, they have the most value to dilute. And then we have the short sellers, just as me. So CBRP was not totally ideal. But I decided to take the trade anyhow, because as you can see, the yearly chart was kind of overextended. We're up about 50% from its start. But yeah, I decided to take this. I entered and I kind of chased weakness. I was kind of hesitating, and as I said in previous video, I've been struggling with executing my plans. So I basically said to myself, just do it. The Nike logo, just do it. Don't think too much. You have done your research. It's probably a valid setup. If not, then you're going to be okay. You're not going to lose 10% of your account. You're basically going to lose 1% max. So I didn't play too much size. I took 100 shares, which was $700. So not too much. Also the fact that the market environment was not favoring shorts. We had NBEV and IGCE or IGC and TLRY running, so you have to have that in mind as well. The market environment was not ideal, the setup was not ideal, and therefore I only took a small size. And this is how the trade worked out. I had planned to cover at 650, and in hindsight that was kind of, or I wanted, my statistics says much more, it has a much higher percentage of decreasing than the 650 level as of covering, but the fact that we had the market environment not on our side and this not being a gap up and not ideal made me say, hey, let me reduce my expectations some. And turned out that 650 was quite a great cover would have been actually. And what made me think of 650 is, of course, the round psychological number. You can never forget that humans are lazy, lazy by nature. They want to take the easy way out. They want to say, okay, 650, that is psychological. I can count 10% of 650. That's better than 642. So, we humans work like that. We're very simple creatures, or at least I think when it comes to the logic of decision making, especially with numbers. So I entered 715 and, kind of not sweaty. And I forgot to have VWAP up. That is the first lesson. Always have VWAP up. So key, because so many traders base their decisions off it. You don't have to do it, just to know where people are at in their mentality. And then we got to open. I said, hey, okay, I wanna kind of read the tapes to see if there are any big people in this, what they're doing. But then, of course, my software crashed. And before that, I had taking a cover in pre-market at 7 because I saw that, okay, this is kind of bouncing back. We got some bids of value, and I thought that the ATM was just going to crush it. So that was not within my plan. I took emotional cover. So once again, have more believe in my thesis is a key lesson right away. But if we get into the market open, I wanted to watch tape and I wanted to read some tape, analyze it basically. Had my setup up. I have Thinkorswim, and of course I have Stocks to Trade as my backup. I use it mainly for my scanners, but of course it's a backup if TOS crashes. But what happens? TOS crashes, of course, and SDT, lags. So I'm like, bro, I'm like all over the place. And when I get my shit figured, the stock is just, bouncing. I saw it at 650. I'm like, hey, that's my cover. I want to cover. And then when I get to my, when I'm anticipating or trying to cover, it bounces. So I'm like, fuck, man. And I don't have VWAP up at that time. Had missed that, of course, and that is not the key one thing that you think of when you're stressed. I have to have VWAP. So basically covered just as we tested VWAP, and that was such a terrible trade. That was such a terrible cover. But shit happens, and the best thing about it is that this is a lesson that's going to sting or stick, because these traumatic or this experience that I get when something doesn't work out 100% according to plan, that is what's market experience and what you have to remember yourself to do until the next time to avoid trouble. So super great lesson. So first off, always have backups, of course, if something were to happen, and have detailed plan as always. And my emotional cover down here should probably just have been, I should just have been more intact with my thesis and just say, hey, I want to risk a more key area and say if it bounces, it bounces. I think that at open we're going to see the main dilution, because that was my thesis. And then as technical crashes, you can always set stop losses, but I'm not a big fan of that. But the main takeaway is, as with the other trades, have a more detailed plan and drew out lines or make lines that visualizes your risk level, so that you're more intact with it, both mentally, but also that you're seeing it, staring it in your eyes. So if you cover above it, you're going to feel bad about it. That is basically how I'm going to tackle this problem. Now let's talk about some real quick. Just I know I'm going over time, but let's just real quick talk about a market environment. So what's really, really, really key to take away from this week of trading is what market or sector hype can accomplish. And what I mean by that is especially on IGC. IGC has approximately 56 million in resistance. Consistently traded around this 250 area. We have this double top up here. That is quite a big resistance area. Or even if you just want to base off this green candle, it's around 40 million. It's still of significance. And what's really key to take away from this market environment is what sympathy plays can accomplish. You might think that 40 million is a strong enough support area or resistance area to keep this Moto F down, but nope. And also something key to take away is when shorts are getting underwater, this is what happens. They squeeze. And I talked about this in the previous video, how you can recognize this. It's grinding up and then they get out on word. And I think that's all guys. And NBEV, of course, also a very, very, very key where it broke this. Not so huge, but 20 million resistance. That's not huge. But also something key to take away is, I think, or my general thesis, to stay away from FOMO, because as this gets higher and higher, you are more likely to get FOMO of missing out the big day it drops, which was Friday, unfortunately, or fortunately. But I said on Wednesday that I'm not going to trade NBEV. I'm not going to trade it on the short side. Because why? Because I have no freaking clue of when it's going to drop. I have no indicators, I have no experience that backs me up, that gives me any thesis when it's going to drop. But now I have experience of this. And the main experience that I take from this is that human is so freaking simple when it comes to numbers. We like round psychological numbers. We like whole dollar levels. And of course we can have some statistics from this kind of action. Like how much does it gap up the last day? How much does it push from the last day? And I have some statistics from that, so it gives me a brief idea. But I think that's all, guys. To summarize, have a detailed plan with your risk. Do whatever it takes to make you understand that. Don't cover until the risk is hit, for freaking God. And then if you don't see like an edge or anything that makes a setup like understanding or predictable to you, just say, hey, then I'm going to miss it, but then let's gain some experience from it, so that you won't be missing out on next time, because the market is going to provide you with this somewhere, I don't know, probably within this year or next year. Who cares? But when it comes, you're prepared. Yeah, I think that's it. So keep on trading, guys. Remember that the trading is for the fun part. The money is the high score that you score within this game. Peace, guys.